Today I will reveal the best candlestick patterns for gold trading. You will learn the structure and the meaning of each pattern, and I will explain how to identify and trade these patterns easily. Like this video, subscribe to my YouTube channel and learn powerful candlesticks that I trade for years. The first candlestick pattern that you must know is Doji Candle. This candlestick has a very simple structure with opening and closing levels being equal or almost equal. Doji Candle signifies market equilibrium and the balance between market supply and demand. Its formation can provide important insights into the behavior of the market participants. To understand the true meaning of Doji Candle, I always recommend my students analyzing that candle in relation to preceding candles. In this example, we can see that gold price was rising because of the excess of demand. The formation of a Doji Candle on the top of this bullish movement signifies that the market finally found the equilibrium, that the excess of demand was finally absorbed by the sellers. That is the best indicator that at least locally the market found a fair value. By the way, always remember that Doji candles often form when gold price reaches some important liquidity zone. In that example, the market clearly was looking for selling liquidity, and if we analyze the historic price action, you can see that gold price reached a supply zone and then found equilibrium, and Doji Candle accurately confirmed that. Cheaters, don't miss my next free gold forex trading signal. Subscribe to my free Telegram channel now, the link in the description below. Once you see a strong bearish movement on gold, always remember that it happens because of the excess of supply. A formation of a Doji Candle on the low of a strong bearish movement will signify that the market finally found equilibrium and balance, and the excess of the market supply was finally absorbed by the buyers. It will mean that sellers at least temporarily lost control. And also remember that such Doji candles often form on liquidity zones. You can see that here we got a very important historic demand cluster. Depending on the preceding candles, Doji candle can also signify low momentum and weakness. On this price chart, we can see that gold was rising rapidly because of the excess of demand. At some moment, the momentum became weak and gold started to consolidate. In this consolidation, we see two Doji candles. These Doji candles simply confirm the weakness and the low market momentum. It shows us that trading volumes and market volatility are very low. When I trade gold, I don't use Doji candle as an entry signal. To me, a formation of this candle is the critical indicator of a changing market sentiment, while another candlestick patterns that we will discuss will provide accurate signals. The second important candlestick that I use for gold analysis is Rejection Candle. A bearish rejection should have a long lower wick, while a bullish rejection should have a long upper wick. The high of a bullish rejection candle will indicate a critical price level, a key resistance level from where a strong bearish reaction followed. We should keep an eye on such a price level in the future, because market orders may keep being concentrated there. A bearish rejection will indicate a key support level. The low of that candle will confirm a significant key level. We will assume that buyers were placing significant buying orders on that level. For that reason, the price was strongly rejected from that. And we should keep an eye on such a price level, because in the future we may see a similar reaction to that. On this price chart, we have two nice rejection candles. We got a strong bearish rejection from that price level, and you can see that once gold price reached that, we bounced rapidly from that. A long wick was formed and it confirmed the significance of that key level, and when it was tested in future, we got a similar strong bullish reaction to that. And we also got a strong bullish rejection here. A strong bearish reaction to that price level confirmed that it is a strong key resistance. When the price tested that the second time, we saw a strong bearish movement after its test. The third important candlestick that you must know is a high momentum candle. A bullish high momentum candle should have a large green body and tiny or no wicks. It will signify a strong buying imbalance. Remember that the body of a high momentum candle is large in relation to preceding candles. In this example, we see two high momentum bullish candles. Their bodies have big ranges in comparison to previous candles. A formation of a high momentum bullish candle will signify a strong bullish sentiment and aggressive buying interest of the market participants, while a bearish high momentum candle should have a large red body and tiny or no wicks. It will signify a strong selling imbalance. On this price chart, we see a great example of a high momentum bearish candle on gold. Its formation signifies a strong bearish sentiment and aggressive selling behavior of the crowd. And again, we judge about the size of a high momentum candle, comparing that to previous candles. The first three candlesticks that we discussed will help you to analyze the market sentiment and the distribution of a supply and demand on the market. The last two candlesticks that we'll discuss will help you not only to analyze gold, but also use them for accurate entries. The first powerful candlestick that I use for trade entries on gold is Engulfing Candle. A bullish engulfing candle should engulf the entire range of a previous bearish candle and strictly close above that. It will signify a strong buying imbalance and a signal to buy gold. Formation of a bullish engulfing candle on an hourly time frame on gold provided a strong signal to buy. You can see that the price formed a strong bullish candle and it engulfed the range of a previous bearish candle with its body. It confirmed a strong buying imbalance. The best entry for trading bullish engulfing candle is to enter the trade after the engulfing candle closes. Your stop loss should lie below the lows of the engulfing candle and you should aim at the closest strong resistance. A bearish engulfing candle should engulf the entire range of a previous bullish candle with its body and strictly close below that. It will signify a selling imbalance and provide a signal to sell gold. Check this example. You can see that gold was rising rapidly and then a formation of a bearish engulfing candle confirmed a bearish reversal. You can see that this bearish candle successfully engulfed the range of a previous bullish candle. It signified a strong selling imbalance and provided an accurate signal to sell. Once you identify this pattern, remember that your best entry is the level of the close of that engulfing candle. Your stop loss should lie above its high and your take profit should be at least the closest strong support. The last powerful candlestick pattern that you should learn to recognize analyzing gold chart is inside bar candlestick pattern. This candlestick pattern should be based on at least 3 candles. The first candlestick in this pattern will be called mother's bar and it can be a bullish or a bearish candle. It doesn't really matter. Consequent candles that strictly close within the range of the mother's bar will be called inside bars. Such a candlestick pattern will signify an equilibrium and accumulation of buying or selling orders and consolidation. We will assume that smart money will silently absorb the market orders within the range of the mother's bar. When the accumulation is over, a breakout and the candle close above or below the range of the mother's bar will be a strong signal. Bearish breakout of that will provide a strong signal to sell. Here we have a perfect example of an inside bar candlestick pattern that was formed after a strong buying imbalance. The market found equilibrium and started to consolidate. Then a breakout of the range of the mother's bar was a strong bearish signal. It signified a selling imbalance, the excess of the market supply, and provided a strong signal to sell. The best entry for trading this candlestick pattern is to open the trade on the level of a close of a breakout candle, set your stop loss above the highs of the range of the mother's bar, and aim at the closest strong support. While a bullish breakout of the range of the mother's bar will be a strong signal to buy gold. Here we have a great example of inside bar candlestick pattern. You can see that first the price formed quite a strong bullish candle, mother's bar, and then you can see that consequent candles started to close, respecting its range. The formation of this pattern confirmed a consolidation and accumulation, and the bullish breakout of a range of a modest bar was a strong signal to buy. And you can enter your trade immediately after a breakout candle closes. Set your stop loss below the lows of the modest bar and aim at the next strong resistance. After you learn to identify these patterns, use them all in a combination. Combining multiple candlestick patterns will help you predict market reversals and strong waves on gold way before they happen. Integrate these powerful candlesticks into your trading strategy, and good luck to you in gold trading. Let me know in the comment section what candlestick patterns do you use for gold trading. Don't miss my next free gold forex trading signal. Subscribe to my free Telegram channel now. The link in the description below. Also, traders, please watch my other videos.